Welcome to Investors Insights, where today's topic is earnings bonanza. A lot going on this week. Before Ty talks about how earnings are justifying valuations, I want to start by saying we continue to deal with uncertainty in the Middle East as gas prices continue to climb. And while that is a concern, what is not a concern is how healthy corporate America is as earnings season continues to impress. And this quarter's S&P 500 index earnings results have been nothing short of remarkable. And as you can see in this chart, 84% of companies that make up the S&P 500 have reported earnings above estimates in the first quarter of this year. And the percentage of index companies that beat earnings expectations in the first quarter, again, 84% as of May 8th, is above the 5-year average, you can see in the chart, of 78%. We're also seeing 7 of the 11 sectors that comprise the index reported year-over-year earnings growth rates of at least 10% in the first quarter. So again, really remarkable on how strong corporate America is. And the important part of this earnings season is that we are seeing revenue estimates lend support to analyst earnings optimism. So there was talk on Wall Street heading into this year that earnings estimates were too high, but corporations are really meeting the challenge. And an important point is that the S&P 500 blended revenue growth totaled 11.3% in the first quarter. That marks its 22nd consecutive quarter of revenue growth. Again, 22nd consecutive quarters. That's phenomenal. And so we continue to analyze if equity markets are overpriced or are current valuations justified by persistent earnings and revenue growth. And then again, we're seeing 7 of 11 sectors beat earnings. So Ty, earnings are phenomenal here. Talk about how earnings are justifying the valuations of the market.
Yeah, I think we get a lot of calls, especially lately with, one, are we in an AI bubble? 2, everything's so expensive, valuations seem to be high. And we're not here to say that, valuations aren't, maybe a little stretched. But what we are saying is, even though the price of a stock or the price of an index can go up, it can actually be cheaper than it was, 3 months ago, 6 months ago. And so here's an interesting chart showing the power of earnings. And so in that blue line there is the next 12-month kind of earnings per share estimate. As you can see, up about 13%. You just alluded to how strong earnings have been. They were up more than 13% in Q1, but this is kind of what we're expecting moving forward now. So as those estimates continue to be raised. So earnings are very strong. The price of the market is up about 8%. And so if earnings are up 13 and the price is only up 8, you see in this red line here, which is below trend, that's the price to earnings ratio, is down about 5%. That's just that 113 minus that 108 number here, as you see on the screen. And so what that alludes to is that the market is actually experiencing what we call multiple compression. So sometimes you have stock prices that go up, but the earnings aren't that great. And we call that multiple expansion, meaning they are just becoming a little more overvalued, even though their earnings power is not really changing. In this case, we actually have what we call multiple compression. The earnings have been so strong, the price is still trying to actually catch up to that. And so that's a very interesting dynamic. Again, not here to argue that we're undervalued, but here to kind of point out that something, not many people are talking about. We're actually cheaper now than where we started the year at because of earnings.
Yeah, look, earnings matter. So with all the noise in the market around higher oil prices, uncertainty in the Middle East, uncertainty around what the Fed's going to do, we're seeing yields and interest rates move higher. What's not in question is how healthy corporate America is. So again, 84% of companies in the S&P beat estimates. That is a phenomenal number. Earnings matter. Earnings are what is the key driver of stock prices. So we'll continue to keep you updated as we conclude earnings season, but we're really liking what we're seeing so far. So any questions on anything we've discussed, call us, email us. We love to hear from you. Have a great week. Thanks.